Good morning, I'm Debra Borchardt, and this is Wall and Broad. Futures for the major indices are firmly in the green territory this morning. Some credit the strong German factory orders, which boosted the euro, while others credit talk of continued easing. Either way, stocks are up. One stock that isn't up is Tesla. The stock has been on fire, not unlike a car battery, and so the stock was priced for perfection. Tesla delivered a record number of 5,500 Model S cars, but the car maker is still facing supply issues. The CEO, Elon Musk, said the company was production constrained and not demand constrained. But delivery limitations worry investors, and the stock has dropped 11% this morning. While some think that earnings season is winding down, it is just heating up for media companies. Time Warner and Fox have reported, with Disney on deck. Joining me now is Leon Lazaroff to cover these earnings. So Leon, it does seem like there are a few overriding themes this season, and one of them is TV. It looks like this is still a pretty good business.
Absolutely. This is a very good business, and Jeff Bukes proved that this morning with Time Warner. They're up over 2% this morning on really strong numbers from television. And what it's showing is that even though some of the networks, and obviously these guys don't own a network, but the networks in terms of TV ratings, they're lower than what they've been in the past. But nonetheless, they're still getting great numbers from advertising, good numbers from affiliate fees. And you saw that even with a company like Time Warner Cable last week reporting. Their numbers were not bad, considering the fact that they did have that spat with CBS, so they lost subscribers on that side, but they're still getting good fees, and they're getting good fees as well from high-speed internet. So that company is doing well. So the cable bundle continues to work.
You know, and we're talking about TV ratings and how no one's watching TV anymore, and then Fox goes along and spends all this money to build out some sports channels, and while that hurt them this quarter, I would expect eventually it's going to pay off.
Well, that's right. I mean, and I think that the investors for Fox tend to be a longer-term investor. These are folks who have great faith in Murdoch. And the fact is, they did spend a lot of money on Fox Sports, Fox Sports 1. But the fact is, they have to do that because they realize that as the internet builds out and you have places like Netflix for people to go to for drama, the one thing that folks such as the big media companies can own, they can own the sports contracts. And that can fuel them, and it continues to fuel them. You look at a company like Disney, an enormous amount of their profits come from ESPN, and ESPN is still going to tower over Fox Sports for the moment, but Murdoch knows that over the long term he has to build that up because that's going to be a generator of profit in years to come.
All right, so TV's still a good business to be in. What about the movies?
Well, the movies tend to be, you know, they're ups and downs. The fact is, it was a tough quarter, the third quarter being the summer was packed with all these blockbuster films. Disney obviously took a huge hit on Lone Ranger, but they're going to have a really nice into the next year. I mean, certainly this quarter as well. Thor opens at theaters on Friday. That's going to be a big one. The Secret Life of Walter Mitty is opening. That's looking to be something that's going to do well. So you have movies that certainly the companies are making fewer movies, but the movie business is still healthy. It's healthier than people think it is.
Well, and the stocks have certainly done well. All of those stocks have had a great year this year. And you know, one thing that happens in competition, well, with Disney, when they face competition, they just went out and bought Pixar Studios. Apple is now facing tough competition from Samsung, and here to tell us more about that is Brittany Umar.
Yes, Apple may be leading smartphone sales in the U.S., but Samsung now topples it overseas. That's according to research firm Canalys, which found that Samsung's worldwide market share rose to 34% in the third quarter, with Apple at only 15%. The firm found that Samsung had the #1 position in every other major geographic market around the world. Canalys also found that Samsung's sales were helped by its dominance in large-screen smartphones, which accounted for 22% of shipments during the quarter, reaching their highest level ever. So what does Apple have to do to improve its global sales? Canalys found that growth overseas is all about Greater China. That market grew the most during the period, expanding by 64%. The region now accounts for 39% of the global market. So perhaps we will see that rumored potential deal happen between Apple and China Mobile, the country's leading carrier, as Apple tries to claw back some market share. Back to you, Deb.
Thanks, Brittany. And later on in the midday market, we're going to have Stephen Guilfoyle from the New York Stock Exchange. That's it for now from Wall and Broad this morning. Good luck trading, everyone.